Right. So I think we can wait for a couple more minutes, but I think it might be worth just cracking on now. This is the first time I've done something remotely, so if you want to join and ask a question, please do so. Please ask a question after my main speech, which won't be terribly long. It's only me. I don't actually believe in speaking for a very long time, so I've got about 15 minutes worth of chat, and then we'll happily take questions that you might have. My name is Oliver Cornock. I'm the Global Editor-in-Chief here at Oxford Business Group. We cover emerging markets around the world. We produce annual reports on about 32 markets, and also have a consultancy division that produces bespoke work on many more markets than just those 32, but still with that emerging markets focus. My personal background is actually the Arab Gulf. Oxford Business Group covers the Arab Gulf and always has done. We are not Iran specialists, therefore, if anybody has got additional details on that, please add that at the end. The focus will be skewed towards the Arab side of things, although obviously within the broader context of our discussion today. As I say, just on the housekeeping front, if you have any questions, please either put them in the chat or hold on to them until the end when we can have a discussion. I like to have a really interactive chat after the presentation. This is for us to all learn and explore new ideas. I plan to look at the various elements of the title, the working title, separately. But in reality, of course, they're all intertwined. So it's a little bit of an artificial separation, and you'll notice there's a lot of crossover. Let's start by just saying a statement of the blindingly obvious. Supply chains and globalization were significantly challenged even before the COVID-19 pandemic struck. That was particularly true in terms of specifics within the region, and I'll come to a couple of those key events, not least the GCC blockade of Qatar, but also the sanctions with Iran. There was a significant amount of trade taking place and continues to take place between the UAE and Iran. But more broadly, COVID simply exacerbated a lot of the problems, what was already essentially quite a precarious situation in terms of supply chains. Subsequently, this has all been made a lot more challenging against a backdrop of the energy crisis and the Ukraine war, Russia's invasion into Ukraine. From the sustainability and ESG angle, interestingly, whilst that in some ways you could have predicted that it might have fallen down the priority agenda, in fact, sustainability has continued to be at the forefront of investors and government policy makers' minds. I think that's a really important point because it underscores the value that's being attached to it, the importance that is attached to it. So that's a really important starting point. Indeed, I think according to Boston Consulting Group, it's estimated that ESG related assets under management will represent up to 80% of total lending to shipping by 2030. That's a really significant change. As to quite what a protracted hot war in Ukraine might mean and the associated conflagration around that, ghastly though it is, it seems unlikely to my mind and Oxford Business Group's mind at the moment that would derail that broader sustainability drive, not least because of the energy conundrum, which we'll come to later, underscoring the importance of alternative energy and more sustainable, greener energy solutions as part of that. But I think just going back to the pre-COVID environment, in the Gulf, there were some clear vulnerabilities already taking shape and being evident. So 2017 saw the UAE, Saudi Arabia, Egypt and Bahrain terminate diplomatic relations with Qatar, resulting in a significant disruption to interregional trade and established supply chains. In 2019, there were some attacks on oil tankers in the UAE and Oman off the coast, and this caused a spike in global oil prices. Insurance premiums rose on the back of that. Now, insurance premiums in the region were already higher. They'd begun to rise significantly around in the early noughts into the mid part of the last decade, particularly with those ships that were traveling past Somalia, where there was a high level of piracy. But that's an important point as well. That put increased pressures on supply chains, on costs surrounding supply chains. Then in 2020, we had the COVID-19 pandemic. The ability to ship, import, and export products was either suspended or significantly restricted, which had a huge knock-on impact on things like just-in-time inventory, something we're going to come to in a moment. There was a significant rise in theft from supply chains as well across, and losses of about 170 million euros just on that front alone, equating to about $1 million every other day from theft alone, due to that disruption. Quite an interesting and high level figure there, sorry, a large figure there. And then most recently, and this is again a theme that's going to perhaps become sadly more prevalent as we become more dependent on issues related to artificial intelligence, for the industry 4.0, etc., that rely on digital things, cyber attacks. 2022, energy markets are on guard for that. That's being priced in already, but quite what that means is very unclear. Power, oil, and gas infrastructure are among the most attractive targets, of course, for rogue states to attack. And the disruption that they cause and the outages that are caused leave states very vulnerable. Just as an aside, it was very interesting to see the vulnerability of British Airways a couple of Saturdays ago, and there's no suggestion that this was a cyber attack, simply a systems failure. The impact of that was very significant. So against that backdrop, I'll briefly now look at some of the elements of the working title in a bit more detail. So starting with infrastructure itself, and when I say infrastructure itself at this point, I'm talking about physical infrastructure. Efficient and modern port systems and freight infrastructure are key to efficient supply chains. They're key to each and every country's economic survival, really. Each Gulf country has invested significantly in port and more broad-based infrastructure, whether that be midfield terminals or airports, road infrastructure. Multimodal has been the watchword for a long time about investment in infrastructure. But of course, 90% of world trade volumes are shipping, and that's really what we're concentrating on at the moment. They're the key to in many senses, an interconnected, globalized economy. This is particularly true when you add into that the just-in-time model that was so prevalent until COVID-19 and in large part remains extant now, albeit with some significant caveats. Capacity issues, particularly in terms of efficient customs and excise procedures, are really, really important, not least on things like fresh produce. And that does present a challenge. There have been significant improvements across the Arab Gulf, but there is still a way to go on that front, it's fair to say. Physical infrastructure risks are a bit more nuanced. In some ways, and this is something that's not talked about too much, Jebel Ali in Dubai and Fujairah as a bunkering port mean that other ports get less of a look in the Arab Gulf. And unless they're specialists, struggle to really compete with both those markets. Ports. The infrastructure factor that is less talked about is that I think in many senses for global shipping lines, Jeddah would be a rather more sensible place to locate a regional hub port, or indeed perhaps ports either at Aden or on the Omani Indian Ocean coast. Of course, Aden's free port project fell down pretty quickly, I think in 1997 or 8, when the USS Cole was attacked there, and that really put paid to that, sadly. And we've seen the deterioration in the security situation in Yemen mean that really they're not a player at the moment. Oman, similarly, there are port projects, but they're not really in a position to compete. Neither are they as interconnected as Jebel Ali would be to those big conurbations in the UAE, located in proximity to Bahrain and the other markets there. And Jeddah is quite a long way, of course, from that, but is an important point of call, though, for the Saudi market. Add into that rail projects in Saudi Arabia, and that's suddenly a rather more attractive proposition. Strategically, though, the location of Jebel Ali, and I think it's important to say this, whilst Dubai in many senses, and Jebel Ali is a good example of this, has that first mover advantage. there is a strategic challenge, a risk with that significant port and a bunkering port quite so far up the Gulf, sorry, and I think that's an important point and a risk there in terms of a strategic location. Continued investment, though, more broadly in infrastructure is going to be really key. I think, particularly in the containerization and the splitting off of bulk cargo and how that's processed in the region continues to present opportunities. So let's have a look now at supply chain. The COVID-19 pandemic underscored the fragility of that just-in-time process, that just-in-time inventory model. Add into that, and this is just one poignant example, food imports on which the Gulf relies so heavily for fresh produce, given its arid environment. And there can be no surprise that Gulf countries now are all pursuing food security policies. Import substitution is a huge area of strategy now. And this, of course, poses its own sustainability conundrum, which I'll come to later. But just to point that out, that to state the obvious, whether you're producing livestock for meat or agricultural products, they are all water intensive. And that presents a number of challenges, of course, in a very, very dry and arid environment. But it's not just food. The Gulf markets rely on many imports, as countries with growing middle classes always tend to. The level of consumption is ever increasing. As anybody who's visited will know, consuming is big, and that's an important part of the social fabric of the Gulf. And I think as perhaps a tertiary point, it's worth pointing out how important the retail space is, consuming is as part of society. Any challenge to that, and here is the risk, presents the potential for has social implications, and I think they're all obvious to us all. So the next angle, I think, in the title we need to have a look at is energy prices and the cost factor. I was in the UAE just a few days ago talking to businesses, and again I kept hearing the story that, you know, a little while ago it cost £2,000 to ship a container. Now it costs £12,000. That's a huge level of inflation and a huge challenge for businesses. I think the IMF has recently said the war in Ukraine has only served to underscore how important supply chains are and what a severe impact might be seen on markets. Add into that the sanctions against Russia, we all know what that's happening to oil prices, and the inflationary pressure suddenly looms as well. I think the soaring price of oil is something we're all very well aware of. And I think investors are still processing quite what that means. Markets opened have been very volatile. Monday morning, of course, saw those big sharp moves, and most notably on those energy prices. Brent crude today is trading at about $126 a barrel. When I just looked, a bit down from that high of $130, but that's still double what it was a year ago. Huge implications there for anybody involved in shipping. The price of European natural gas has also tripled in a month, which presents challenges across the consumer and business sphere. I think it's important just to look at the conundrum therefore for Gulf markets. I'm always a little wary of the mantra that high oil prices are good for Arab Gulf countries. Time and again we hear higher oil revenues mean that they can take the foot off the diversification agenda, which of course is exactly the opposite of what's required. This is an area, of course, where Iran suddenly becomes key. Oil prices are high at their highest point since 2008 at the moment, and any delays to a return, and we don't know quite what this might look like in the potential return of Iranian crude to global markets, particularly against the backdrop of the US and Europe considering banning on imports on Russian oil, of which I think the US did yesterday, means that Iran, in many senses, is being the only bearish factor in the markets, and therefore has a huge capacity, were there be a relaxation of sanctions, to be the swing producer suddenly, really. But Iranian oil could take months to come back on and to flow into this on the back of any sort of nuclear deal. So I think it's worth, there's a lot of nuance there to be considered, and this is certainly something that's a session on its own probably. That said, the Iranian Minister of Petroleum has said that the country would readily enhance its crude oil output to help stabilize global markets. So the offer is there from then. I think it comes down to that sort of the geopolitics around that. Meanwhile, President Biden's advisors are weighing up a trip to Saudi Arabia. I think it's no great secret that the failure of the Biden administration to meet with Saudi Arabia recently has been something that's grabbed column headlines. Saudi Arabia so far have seemed to decline overtures on engagement on this, so it remains to be seen. OPEC Plus, of course, ostensibly opposed to opening the taps there as well. Of course, that may change, but that doesn't really particularly help the current environment, and all plays into another factor I think that's often undercovered, which is sentiment. Markets are very sentiment driven, particularly in the Gulf, although perhaps less so than they were. And there are, of course, opportunities here. The opportunities are manifold. I think in terms of oil and gas and what that means for supply chains. The IAEA have got significant reserves. Is this a time for governments to access strategic reserves, for example? What would be a trigger point for them to do so remains to be seen, but there is an opportunity there, however short-lived that would be. There are many, billions of barrels of oil held in strategic reserves. What is clear, though, is I think that particularly Europe needs to act quickly on its energy front, but that again is not for now. In a period of severe disruption, both price-wise and inflationary pressure, Gulf shipping and logistics companies are really having to look at adapting what they do. They were already looking at that, remember, against the backdrop of COVID-19, and that's alongside government efforts to boost self-sufficiency, which I've already spoken about a little bit. One of the key areas of infrastructure that therefore needs to be invested in is digital solutions, corporate digital solutions, and what that might look like I'm going to come to. But all of that is really, really important. So I think it's important to think about infrastructure not just simply as port infrastructure, as airports, as intermodality, but also the future of transport being so governed by algorithms, by artificial intelligence, and the benefits that are potentially derived from such initiatives and technology. Freight capacity increases, despite price pressures, are going to be really interesting to see that happens, particularly against a backdrop of everyone continuing to experience container backlogs. We still hear about the backlogs of containers in ports like San Francisco. Therefore, the role of enhanced technology and innovation is going to be really important. And I keep coming back to that because I think from everything from warehouse management and distribution management, the importance of addressing how digital solutions will be employed, but also cybersecurity is going to be so key to actually using these as solutions and making them work as solutions rather than ideas. I think emerging digital solutions, e-commerce is a huge area now. E-commerce, remember, and it's important to point out, was really very much a nascent area in the Arab Gulf markets before COVID. There was a huge leapfrog towards e-commerce and home delivery. In places like Saudi Arabia, outside of the big cities, just getting something delivered was particularly challenging, not because the infrastructure wasn't there, but the postal and address system wasn't quite in place. That's all changing. So smart digital solutions are already helping companies meet the challenges of the current environment and that supply chain and logistics conundrum. Just as countries have invested in their port and infrastructure, therefore, I think it's really important for them to continue to invest within the digital space. If that's not done, then that tech ecosystem won't be in place, and therefore the competitive nature of those markets will be compromised. And that's a really important point. There's a strong appetite, finally, I think, in investor circles for that. And I'm going to come to that in my conclusion, some figures there about the appeal of more sustainable and digital solutions to investor portfolios. We've seen that. Recently, we were speaking with the CEO of a company called Al Rashid International Shipping, in which he highlights a lot of the steps being taken by businesses. And I'd urge you to have a look at that. It's available on the OBG website, where he makes it very clear, actually, that we mustn't look at freight and logistics within the GCC within just a bubble. It is all part of a much broader interconnected system, and all of the challenges and the same opportunities exist. And he was very clear that shipping companies in the region are making the changes necessary to adopt to this new environment. And so that for sort of future proofing, I suppose, which is where we're going here, is so important. And that really is, ladies and gentlemen, one of the challenges we're going to come to. A failure to keep up to pace will result in a failure to compete. We just, interestingly, on our website today, published an interview with a Singaporean business, a company called Integra, which discusses the sustainability issues around stakeholders in shipping and logistics. And again, against not just a backdrop of the Gulf and Iran, but particularly a global backdrop, which is really all about. I urge you to have a look at that. It's very, very interesting. Not least because a wrong decision today in terms of strategy could have disastrous consequences for the bottom line in many years to come, particularly in a sustained period of volatility, wherever that may come from, whether that be foul play or energy prices. So in this sense, for companies looking to diversify supply chains and reduce emissions, adding the Gulf to a supply chain for goods such as chemicals and petrochemicals, where the region is already at an advantage and a competitive advantage, could help, could particularly help if previous supply chains were stretched from the Far East to Western Europe or North America, encompassing that market. All of these national strategies that are being developed at the moment, strategic agendas, visions, are all increasingly, and in some cases ostensibly, shaped around net zero transition. That's really important to remember. Gulf companies in various industrial subsectors are all looking to position themselves favorably against the backdrop of sustainability and that shift. Investors, again, and I'm nearly there, investors are really, really focused on sustainability and continue to be so, and that's particularly true in the region, as well as, of course, in the big financial hubs of London, New York, and elsewhere. But that said, the energy transition will not come without risks for the Gulf. The Gulf, of course, as I've just said, is looking to shift away from that dependence on oil and gas and is investing so heavily in many other areas. But it really, really is important to remember, and I always say this, diversification away from oil and gas has never meant a severance from it. It is about using those assets much more efficiently. And therefore, a much greater focus starts to emerge on energy efficiency, demand management, circular carbon economies, those sorts of things. So it is not, remember, a complete severance. I think that's very, very important. Overall, the Arab Gulf countries, therefore, are especially well placed, I think, to benefit from an increase in the use of hydrogen. We're seeing a major shift towards ESG, as I've just said, with developments underway in Qatar, Saudi Arabia, the UAE, Oman, all of them focused on that increasingly. There's significant investment going on. And while the higher level rhetoric, I suppose, in the major Gulf countries is around achieving net zero and those strategic development goals by the middle of the century, the policy agenda in lots of areas is not at all focused on winding down petrochemicals. On the contrary, major plans are underway to expand production just in a cleaner way. Governments instead are pinning their sustainability hopes on meeting targets in other ways, and particularly through carbon capture and storage. And that's a very innovative area, again, an area of huge investment. And I think if investments in R&D and the technology around that continue, the implications for supply chain more broadly are really interesting. All of these areas are getting greener though, and from the global point of view, shipping, as I said earlier, which accounts for about 90% of global trade, will need to invest about $2.4 trillion to achieve net zero emissions by 2050. That's $2.4 trillion. That figure's from Boston Consulting Group. Banks are also demanding much stricter environmental criteria for lending to the industry. Similarly, insurance companies are also under huge shareholder pressure, which is causing institutional funds to look at where and reassess where their shipping investments go. Very important. ESG-related assets under management are estimated to represent up to 80% of total lending to shipping by 2030. Again, that's a BCG figure. So just to bring everything together there and summarize, the risks and opportunities for supply chain against this backdrop of sustainability within the region remain particularly nuanced. There's many factors at play here. Security and geopolitics in this region are never far from the forefront. Against that backdrop of what's going on in Ukraine now, that's been brought particularly clearly out. It's a particular dilemma for Western economies, what to do over Russian oil, what to do over Iranian sanctions. Watch this space. What role Iran will be allowed to play remains to be seen. Realpolitik may, of course, just start to play a role here and see a thawing of rhetoric around what's going on. Much to be looked at there. Either way, energy prices look set to be the dominant factor in the immediate term for supply chains. They're also the dominant factor, of course, for economies, and the region is no exception to that, and their investment in strategic policy initiatives. That's all against that backdrop of the legacy of COVID-19, which has left that hangover, if you like, within the supply chain and logistics sphere. The deployment of artificial intelligence, the areas of machine learning, algorithms for supply chain warehousing, the management of fresh goods, the elimination of such high levels of waste, particularly in the food sphere, have the capacity to really transform the sector. That is a huge opportunity, and it was really exciting to be in the UAE last week speaking to businesses directly involved in that. Again, importantly and crucial to remember that this is part of government policy as well. So companies and businesses that are looking to invest, and that's what we at Oxford Business Group are really about, is identifying those opportunities for businesses. If you can dovetail your business into a strategic objective of a government vision, then the incentives are really significant. But the efficiencies and cutting waste are so important. I think in conclusion then, what's great about this topic is that there's really no right or wrong answer. There's just some ideas that I tried to put out there and bring it all together. There's no pithy conclusion here. So I'm really looking forward to a bit of a discussion now, if anybody would like to join in, and open the floor up here to discuss this further. I'd be really intrigued to draw on our participants and to know particularly about the Iranian side of things, which is something that we at Oxford Business Group don't cover quite so much. And I notice Barak's microphone is on, and he might be raring to go.
No, I'm not. I was just absolutely fascinated by your presentation, and the reason for it and the reason why we discussed it to supply chains is already at the beginning of COVID, I knew that supply chains were going to be an issue, and I published a really long essay in the National Interest about supply chains, and people were befuddled by why I would publish in a security journal about supply chains and the technical implications of it. And you know, it was just so interesting to hear you speak in the beginning about the short supply chains that mark the just-in-time supply chains that mark globalization. And in a sense, our world has changed, and we don't know. What I think is really interesting is how supply chains will continue to evolve. So, you know, finally, we're initially globalized, regionalized, nationalized. Like, how is it going to continue to adapt, and how will there be that inbuilt flexibility to be resilient? What will be the impact on costs with that?
I think there's the cost. I think you're right. You've hit the nail on the head there with cost, but it is not just a material cost there. I think one of the big costs and the risks, the downside.
Sorry, you're ahead, and I don't know why.
Can you hear me now?
Can you hear me?
Yeah.
I'm going to leave. Sorry, my apologies. I'll leave and join the session again. Sorry,
Yep.
Give me a second.
No,
sorry.
I don't know whether, I think Barak's hit a real nail on the head, and it's not just the costs and how you manage costs against this backdrop of increasing inflation. There is a social implication there, which is really, really important. The cost to societies within the GCC that are particularly sensitive to any social upheaval. And I think that's really important. Let's not beat around the bush here. In these environments where there is a huge population, bottom heavy population, Saudi Arabia, 70% of the population are under 30. You know, this is a huge challenge. These people are consuming exactly the same things as you and I are. Gone are the days where there is a huge difference around the world. People consume on Netflix, people consume the same, want to wear the same trainers. Those things are massive pressures. And any challenge to that, and I'm not going to go down that road, you can all know where I'm going on this, any challenge to that has huge social implications as well. So the cost is not just a physical one, it's a political one as well. This is why I suspect, Barrett, you put that in a security thing. Again, this is part of the soft power, but actually a failure to address that soft power could have huge hard and hot implications. Sorry, I think you're muted, Barrett.
Sorry, it does have hard power implications, and I just wonder on the back of that whether China can fill the void. Is the Belt Road Initiative that China's creating, does it have accompanying that a model of supply chains that is rivaling that of the West? We all speak about infrastructure development and roads, etc., but we don't know what their supply chain model is going to be.
No, and then the lack of transparency about that is really challenging. It's quite interesting also that that our region that we're focusing on today really is circumvented to a large part by that. Of course, that's not true of the eastern flank. I think it still comes down though, Barrett, to costs and whether China are prepared to integrate in a way that enables those costs to come down. And I know it seems like I'm a stuck record here, but it does come to that. It's the cost implication, because you might have the most appealing infrastructure setup, but if the cost point isn't correct, it won't work. And that comes down to integration. And I noticed we've got, sorry, must go to the questions here from F. Will container shipping costs fall in price when things get more normal? The simple answer to that is yes, it's just when that will happen. And somebody much wiser than me once said, never predict the price of oil. And the same thing, I'm not going to be drawn into predicting when costs will come down. But it's unlikely they're going to come down in the immediate term, F, because there are so many challenges to that. There are, as I outlined, some factors which would potentially bring costs down, but the energy inputs is one of them, but also that backlog that's being experienced in ports continued, and not just any old port, some of these huge container ports around the world. There's a huge backlog. We saw, I can't remember the name of the ship, just one ship getting stranded in the Suez Canal had a huge implication. I remember seeing the FT have a map of all the ships in there. That's where we are. And that, and to continuing, I shouldn't carry on metaphors, but, they always talk about how the distance it takes for an oil container, an oil tanker to stop. In the same way, to rejig such an integrated system as the just-in-time inventory program, but also more broadly, supply chains is not going to be an overnight option. It's going to be a much broader one, which is why strategy and policy are so important here. I hope that answers that in some way. And then Benjamin Bilski, forgive me if I'm pronouncing that wrong. What do you consider to be the potential of blockchain for transparency and traceability of supply chains and to fulfill government objectives both for resilience, strategic and transparency? Absolutely. You've brought together the bit of my speech that I realized I'd spoken far too long and therefore wanted to get over to you. Absolutely. I think I think blockchain, AI, the machine learning, and again, I go back to the example of fresh produce, the ability for businesses, a supermarket, to import fresh goods and to limit waste, but also learn about what trends are taking place. You know, it always used to be in UK supermarkets that people bought fish on a Friday. It always used to be that people bought more dates in Ramadan, you know, all of those sorts of things. How does that work? And the ability, I know that sounds oversimplified, that is all part of that. Traceability, again, is massive, and it's a miracle, I think, that the global shipping industry has survived as long as it has without a greater adaptation and usage of those things, of things like traceability through machine learning. What that means for the resilience of the sector at a strategic level, well, obviously, the greater the transparency, the greater the planning, the greater the information that goes into policy and strategy. And in terms of transparency from the point of view of sustainability, absolutely, you can see exactly where things are, the cost of the shipping that's taking place in real time, are really, really important. And as for areas such as rules of origin, again, the same applies, in that if you have a blockchain system, it's also not, you're not going to end up with a Volkswagen scenario in Germany where your data is skewed to your market. There will, you know, blockchain, if we believe what we're told, is going to eliminate that risk. Really important. Does anybody else have any questions? Good. Well, in which case, I think we've perhaps exhausted ourselves there. But that was really interesting, and I'm sure there's lots of other questions. I'm here available. If anybody has anything they want to follow up, you can contact me via the website. And I really look forward to enjoying the rest of the day. Thank you so much. Thank you, Barak.
Oliver, thank you. You were absolutely fantastic. So,
brilliant. Thank you, everyone. Bye-bye. See you in another session.